Are you ready for the financial storm that some experts say is on the horizon? Robert Kiyosaki, renowned author of Rich Dad, Poor Dad, is sounding the alarm about what he believes could be a monumental financial collapse in 2025. While headlines often come and go, Kiyosaki's predictions have a way of grabbing attention, challenging conventional wisdom, and prompting us all to ask, are we really prepared for what's coming? According to Kiyosaki, the financial world as we know it stands on shaky ground. From record levels of national debt to surging inflation and unprecedented government interventions, many signs point toward a potential market correction, or even a full-blown crash. Kiyosaki's message is clear. Don't wait for disaster to strike before you take action. Instead, consider investing in assets that have historically acted as safe havens during times of turmoil: gold, silver, and in recent years, Bitcoin. So, why does Kiyosaki, a man known for challenging traditional notions of wealth and success, emphasize gold and Bitcoin over stocks and bonds? To answer this, we need to understand his unique perspective on money, value, and security. Kiyosaki has long warned that modern currencies, like the US dollar, are at the mercy of political forces and central banks. As governments print more money to solve problems, a process known as quantitative easing, the currency slowly loses its purchasing power. The effect is subtle at first: a rise in grocery bills here, a higher car payment there. But over time, this devaluation can erode wealth, especially for those holding large amounts of cash or traditional assets. Gold, in Kiyosaki's eyes, is a hedge against this silent erosion, a timeless form of wealth that has stood the test of centuries. Cultures across the globe have treasured gold for its scarcity, durability, and universal recognition. In moments of crisis or rampant inflation, gold has held its value when paper currencies have faltered. Silver, too, has a similar history, though it is often more volatile and accessible to everyday investors. But Kiyosaki goes a step further. In today's digital age, he sees Bitcoin as fulfilling a similar role. Although digital and born just over a decade ago, Bitcoin shares key qualities with gold. It is limited in supply, decentralized, and not controlled by any government. Bitcoin's blockchain technology provides transparency. While its finite number, only 21 million coins, will ever exist, prevents the kind of inflation that often plagues fiat currencies. For Kiyosaki, this makes Bitcoin a modern form of digital gold. Kiyosaki's forecast for 2025 isn't just about doom and gloom. It's a rallying cry to diversify and protect wealth in a rapidly changing world. He's not alone in urging caution, but his recommendations have set him apart from other giants in the world of investing, such as Warren Buffett. Warren Buffett, the legendary Oracle of Omaha, built his fortune through businesses and stocks that produce real cash flows. Think Coca-Cola, Apple, and insurance companies. Buffett has been famously skeptical about gold, once stating that the precious metal just sits there and doesn't generate income or value on its own. He views stocks as superior vehicles for building wealth, especially when held for the long term and chosen carefully for their capacity to grow and distribute profits. Gold, in Buffett's view, is more of a psychological insurance policy, lacking the productive power of a business. He prefers investments that can reinvest, expand, and create value for shareholders. Thus, his legendary affinity for shares over shiny metals. Buffett's philosophy has served him well, delivering consistent returns over decades and inspiring millions to turn to stock investing for financial growth. So, where does this leave the average investor caught between two of the world's top financial minds? Kiyosaki and Buffett's contrasting worldviews offer both challenge and clarity. Rather than seeing them as opposing camps, many find wisdom in adopting a blend of their approaches. Kiyosaki's core advice is about preparation, not panic. He cautions against putting all your eggs in one basket, but instead suggests building a financial moat with a diversified portfolio. His practical advice is straightforward. Consider allocating 5–10% of your investment portfolio to gold, silver, or Bitcoin. This portion acts as a buffer against inflation, currency crises, and financial system shocks. The remaining 90–95% can be placed in broad-based index funds, ETFs, or stocks, which tend to grow in value over the long term. This approach addresses both the fear and the opportunity inherent in today's markets. Gold and Bitcoin can provide peace of mind when uncertainty is at its peak. Index funds and stocks harness the consistent growth that has built generational wealth. The balance between these strategies depends on your personal risk tolerance, financial goals, and timeline. For those new to gold or Bitcoin, getting started need not be overwhelming. Gold is accessible through reputable coin dealers, bullion sellers, and even some online investment platforms. Many investors choose to include gold via exchange-traded funds, ETFs, which provide the advantages of liquidity and convenience without storing physical gold. Silver, though often more volatile, follows similar principles and provides a more affordable entry point. Bitcoin and cryptocurrencies, on the other hand, require a bit more technological know-how. Prospective investors should research reliable exchanges, enable secure storage solutions like hardware wallets, and understand the volatility that comes with the digital asset space. It's wise to start small, educate yourself, and never invest more than you can afford to lose. It's important to remember that no strategy is foolproof. Markets rise and fall, and asset prices fluctuate. The key is to stay informed, remain disciplined, and avoid emotional investing. Kiyosaki's 2025 warning is not meant to instill fear, but to provoke action and awareness. In closing, consider the words of those who have weathered financial storms before. Preparation is the antidote to uncertainty. Diversification, prudent planning, and ongoing education remain your best tools for surviving and thriving, no matter what the markets bring. So, while no one can predict the future with certainty, listening to diverse viewpoints and preparing accordingly may be the wisest move of all. As Kiyosaki reminds us, the question isn't if the market will correct, but whether you'll be ready when it happens. Are you prepared?